The Internal Revenue Service has made announcements that have been widely interpreted as signaling double stimulus checks for all recipients, a headline that has spread rapidly across phones, televisions, and conversations, especially among seniors who depend on Social Security, supplemental security income, Social Security disability insurance, Veterans Affairs benefits, and retirement income to maintain stability. It is crucial to begin with a clear and direct update delivered calmly and honestly, because this topic matters deeply and confusion can cause real stress. Presently, there exists substantial misunderstanding regarding what the Internal Revenue Service has actually announced, what is real, what is not, and how it connects to stimulus payments, tax credits, and benefit-related refunds. This explanation aims to slow everything down, clarify what is officially happening, and help you understand how money tied to the Internal Revenue Service, stimulus-style payments, and senior benefits may reach some people and why others may not see anything new at all. Over the last few years, many Americans received stimulus checks that were sent out quickly during emergencies. Those payments were designed to help people cover basic costs like food, rent, utilities, and medical needs. Seniors were a major group included in those programs, especially people living on fixed incomes. Because of that history, whenever the words Internal Revenue Service, stimulus, or double payment appear together, it immediately grabs attention. It can also trigger worry or false hope. That is why it is so important to separate official announcements from rumors and to understand how the Internal Revenue Service actually works when it comes to sending money. The Internal Revenue Service does not randomly issue new stimulus checks without a law or a program behind it. What the Internal Revenue Service does handle is tax-related payments, refunds, credits, and adjustments. In recent announcements, the Internal Revenue Service has confirmed actions related to unpaid or unclaimed stimulus-related credits from the past, corrections to earlier payments, and special refund processing for people who were eligible but never received what they were entitled to. This is where the idea of double stimulus checks is originating, but it does not mean that everyone is suddenly getting two new checks. Many seniors did not file taxes in earlier years because their income was too low, or because they relied only on Social Security. In some cases, that caused delays or missed payments when stimulus programs were active. Later, the government allowed people to claim those missed amounts through tax credits. When the Internal Revenue Service processes those claims now, some individuals may receive more than one payment close together. That can look like a double stimulus check, even though it is actually a correction of old money that should have been paid before. Another situation involves people who received a partial payment in the past, but were eligible for more based on income, dependence, or filing status. When the Internal Revenue Service reviews updated records, it may send an additional amount. Again, that can feel like a second stimulus check, but it is really a completion of the original benefit. This is especially relevant for seniors who added dependents, caregivers, or grandchildren to their household information later on. For seniors receiving Social Security, supplemental security income, Social Security disability insurance, or Veterans Affairs benefits, it is important to understand that the Internal Revenue Service does not control your monthly benefit checks. Those are handled by different agencies. However, when tax credits or recovery payments are issued, they can be delivered in the same way as tax refunds. That means direct deposit for some people and paper checks for others. When two different corrections or credits are processed around the same time, they may arrive separately, creating the impression of multiple stimulus-style payments. There has also been an increase in Internal Revenue Service activity focused on cleaning up older accounts. This includes reviewing returns from previous years, fixing calculation errors, and automatically sending refunds where mistakes were found. Seniors are often affected by these adjustments because many rely on simplified filings or non-filer systems. When errors are corrected, the Internal Revenue Service sends what is owed without requiring any new action. That money may be labeled as a refund or credit, not as a new stimulus program, but the effect feels similar. It is also important to address something clearly and carefully. There is no brand new nationwide stimulus law that guarantees double checks for all recipients at the same time. Any claim that everyone is automatically getting two new stimulus payments is not accurate. What is happening instead is targeted individual payments based on past eligibility, corrections, or credits. Some people will receive money, some will receive nothing new, and some may receive one payment now and another later if their case is reviewed separately. For older adults, especially those living on fixed incomes, planning around expected money is critical. That is why relying on viral headlines can be dangerous. The Internal Revenue Service announcements are technical and often misunderstood when summarized in short phrases. The real message is about completing unfinished business from earlier programs, not launching a new one. Another area causing confusion involves tax refunds combined with credits related to dependents or income thresholds. Seniors who filed returns to claim credits may receive refunds that are larger than expected. When those refunds include stimulus-related credits from prior years, they can be mistaken for new checks. This has been happening more frequently as the Internal Revenue Service works through backlogs and update systems. Direct deposit timing can also add to the confusion. If someone receives one deposit labeled as a refund and another labeled as an adjustment, it may appear like two separate stimulus checks. In reality, they are parts of the same correction process. For people who receive paper checks, envelopes arriving weeks apart can create the same impression. There is also an emotional side to this situation. Many seniors are facing rising costs for groceries, housing, insurance, and healthcare. Even the possibility of extra money brings hope and relief. That makes clear communication even more important. Understanding what is real helps people make calm decisions instead of reacting out of fear or excitement. Now let's continue calmly and clearly, because this is where the information becomes especially important for seniors who want to understand whether these internal revenue service-related payments apply to them personally. Many people assume that if they hear about stimulus checks or internal revenue service payments in the news, it automatically means money is on the way. In reality, eligibility depends on very specific situations, and understanding those situations can help you avoid disappointment and also protect yourself from misinformation. One of the main groups affected by these Internal Revenue Service actions includes seniors who were eligible for earlier stimulus payments, but never received the full amount. This could have happened for several reasons. In some cases, records were incomplete. In other cases, income information was outdated. Some seniors were listed as dependents incorrectly, which disqualified them at the time, even though they should have qualified. When these issues are corrected later, the Internal Revenue Service may release funds that were previously held back. Another group includes seniors who filed a tax return later than usual, or filed a simplified return after the stimulus programs had already ended. When the Internal Revenue Service processes those late filings, it may issue credits connected to the earlier stimulus laws. These payments are not new benefits, but delayed ones. Because they arrive long after the original programs ended, they feel unexpected and are often misunderstood as new stimulus checks. Seniors who receive Social Security, supplemental security income, Social Security disability insurance, or Veterans Affairs benefits should understand that receiving one of these benefits does not automatically guarantee an Internal Revenue Service payment. The Internal Revenue Service looks at tax eligibility, not benefit status. However, many seniors who receive these benefits were eligible for stimulus money under earlier rules. If something prevented that money from being delivered at the time, it may now be released as part of a correction or adjustment. There are also cases where married seniors filing jointly receive separate payments. This can happen when one spouse's information was processed earlier than the others, or when a correction applies to only one person initially. When the second adjustment is completed later, another payment may follow. To someone watching their bank account or mailbox, this can look like double stimulus checks, even though it is simply the system catching up. It is also important to understand how timing works. The Internal Revenue Service does not process every account at once. Reviews happen in waves. That means two people with similar situations may receive payments weeks or even months apart. Seniors often compare notes with friends or family and assume something is wrong when timing does not match. In most cases, it is simply the order in which accounts are reviewed. Scams often take advantage of this confusion. When headlines mention stimulus checks or Internal Revenue Service payments, scammers increase their activity. They may call, send letters, or send messages claiming claiming to help you get your money faster. It is critical to remember that legitimate Internal Revenue Service payments do not require phone calls, fees, or confirmations through messages. The Internal Revenue Service already has the information it needs to issue corrections or refunds. Seniors should be especially cautious during times like this when real payments are mixed with rumors. Another area to understand is how these payments affect other benefits. Internal Revenue Service issued refunds or credits related to stimulus programs generally do not count as income for Social Security or supplemental security income purposes. That means receiving such a payment should not reduce your monthly benefit. However, holding on to large amounts of money for long periods can affect certain need-based programs if balances exceed limits. Understanding this helps seniors plan responsibly instead of reacting impulsively. Many seniors also worry about taxes on these payments. Stimulus-related credits are not taxable income. They do not increase the amount of tax you owe when they arrive as refunds. They are simply returning money that was already authorized by law. This is an important reassurance for anyone afraid that accepting a payment might create problems later. For those who did everything correctly and already received all stimulus payments they were entitled to, there may be nothing new coming. That does not mean something went wrong. It simply means your account is already settled. Not every Internal Revenue Service announcement applies to every person. Even when headlines make it sound universal, the most practical thing seniors can do right now is stay informed but grounded. Watch for official mail, monitor bank deposits if you use direct deposit, and avoid making financial decisions based on rumors. Budgeting around confirmed income, not expected surprises, protects your stability. In bringing everything together, we review what these Internal Revenue Service announcements really mean, why the idea of double stimulus checks exists, and how seniors can move forward with clarity and confidence. The goal is not just to explain payments, but to help you feel secure, informed, and in control of your financial future. The Internal Revenue Service is focused on rectifying past omissions and errors, not distributing new rounds of stimulus. By understanding the nuances of these corrections, seniors can better navigate the information landscape, safeguard against deception, and manage their finances with greater assurance. Patience and vigilance are key, as the process unfolds over time and affects individuals differently. Ultimately, knowledge empowers you to distinguish between hopeful rumors and substantive actions, ensuring that you remain prepared and peaceful amidst the flux of news and notifications.